A very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Tuesday, the 14th of October. We thank you for joining us at this time on the show.
Let's now tee off with your news now. Stanbic Holdings, the Kenyan unit of Standard Bank Group, is in talks to acquire NCBA Group in a deal that could create Kenya's third largest lender with assets of 1.1 trillion Kenyan shillings. NCBA, valued at 114 billion shillings, has seen its share price rise 40% over the past year, though discussions remain confidential and unfinalized. The potential merger comes amid regulatory pressure to consolidate Kenya's banking sector and strengthen capital bases across the industry. At the World Bank IMF annual meetings in Lima, a new initiative, AgriConnect, is in the spotlight, aimed at transforming small-scale farming into a driver of sustainable growth, job creation, and food security. With 500 million family farms producing around 80% of the world's food, the program seeks to leverage financing and technology to boost productivity and build stronger agricultural value chains. Here is the president of the World Bank Group, Ajay Banga, with opening remarks.
Over the next 10 to 15 years, about 1.2 billion young people in developing countries will come of age, but current trends suggest that only 400 million jobs will be created. And that delta, this is hundreds of millions, will either power the global economy or they will spill over into unrest and migration. That's why we think that the World Bank Group has to make job creation our central mission. Most jobs ultimately come from the private sector, but they don't all start there. Countries move along a continuum. Early on, the public sector tends to drive job creation. Over time, the private capital and entrepreneurship there in that country and from overseas tend to take the lead. And our three-pillar strategy on jobs reflects that arc. Build infrastructure and skills, create predictable regulations and governance and a business-friendly environment with the right guide rails, and back investors with risk tools that crowd in capital. So where do these jobs come from? We see potential in 5 sectors: infrastructure, agribusiness, healthcare, tourism, and value-added manufacturing. When I say infrastructure, I mean both physical and human infrastructure. Bridges, roads, airports, education, healthcare, skilling. Today we focus on agribusiness, central both to jobs and to meeting global food demand that is projected to rise more than 50% in the coming decades. Emerging markets are at the center of both of those. The developing world has the ingredients. It has land, it has sun, it has water, it has people. Africa has 60% of the world's uncultivated arable land and can boost yields on land that is already.
In other news, the London Stock Exchange yesterday hosted a high-level delegation from Botswana led by Vice President Ndaba Nkosinathi Golate to strengthen ties between the BSE and LSE. Discussions focused on knowledge exchange, market innovation, and promoting cross-border investment opportunities to boost Botswana's visibility as an emerging African investment destination. The visit is part of the BSE's strategy to internationalize Botswana's capital markets, with the delegation also set to participate in the Africa Financial Services Investment Conference later this week. In earnings news, Transnational Cooperation Power PLC, Transpower, has posted strong third quarter 2025 results with profits and revenue surging year on year. The company reported a 38% revenue jump to 308.5 billion naira for the 9 months ended September, while profit before tax rose 12.4% to 91.2 billion naira. Profit after tax climbed 17% to 68.4 billion naira, supported by higher power generation and efficiency improvements. The company said its strong performance reflects resilience and disciplined cost management, positioning it to finish the year strongly. In Ethiopia, the African Union today marks Africa Skills Week, an annual continental platform dedicated to advancing Africa's skills transformation agenda. Adopted by AU Ministers of Education and Training in 2024, the initiative promotes dialogue, experience sharing, and collaborative action on skills development and employment across the continent. Let's now listen.
As your host, Ethiopia understands that the investment on skills development must be comprehensive and inclusive. Our national conceptualization and commitment to TVET is driven by the conviction that every hand and every mind matters. In line with the continental TVET strategy, we are prioritizing practical, demonstrable actions, building on the strong momentum established by our Ghanaian hosts at Africa Skills Week 2024. And now, as we in Ethiopia proudly take in the baton, I believe that our work this week too must be guided by a clear call to action to fundamentally transform our TVET systems and prepare Africa's youth for the future of work. The Ministry of Labor and Skills is already responding to the continental as well as global imperatives through concrete steps and initiatives that underscore our commitment to a skills revolution.
Finally, on News Now, Payaza Africa Limited has opened its 20 billion naira Series 5 commercial paper issuance under its 50 billion naira project. The Pan-African Paper operates in 19 countries across Africa, Asia, the Middle East, and North America.
Interestingly, in the United States, we got our license across the
Transactions,
cities of
blue
US
cards,
and we're still
USSD,
expanding across North
QR
America.
codes,
1 to 10, right? How would you rate Payaza's level in terms of investors' confidence for Payaza?
It's 10. 10 over 10. 10 over 10. 10 over 10. There's something like 12 over 10. I'll take it. This 10 days, you come out to reach 20 billion and you end up around 31-ish, 31 billion.
I
mean,
am Melissa Enoch, and that's it for today's edition of News Now. The show returns shortly with Grace giving us the markets round after the break. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's market review at the Archives Room. Hello there, Grace.
Thank you, Melissa. Let's now track how the markets are wrapping up for the day, starting off with equities. The equities today are mostly negative, with only the BROVM and the EGX closing on the positive. Kenya's NSE fell by 0.51% to 170.34. The Johannesburg Stock Exchange also saw losses, down 0.50%. In North Africa, Morocco's MASI fell sharply by 1.53%, while the NGX All-Share Index closed flat. Let's switch into the commodities data deck, beginning with energy prices. Brent crude fell 2.29% to $61.90 a barrel, and US WTI declined 2.37% to $58.08. Natural gas dropped 2.28% to $3.04, while RBOB gasoline slipped 1.29% to $1.82 as of 13:15 GMT. Finally, two metals prices. Gold slipped 0.28% to $4,121.50 an ounce. Copper retreated 3.40% to $4.96 per pound, and platinum dropped 2.53%. Aluminium fell 1.25%, while iron ore saw gains as at 13:17 GMT. And finally, two currencies. The rand strengthened 1.05% to 17.48 per dollar, while the naira weakened 0.34% to 1,463 naira 34 kobo. The Egyptian pound edged down 0.07% to 47.72, and the CFA franc lost 0.21% to 567.83. The Kenyan shilling depreciated slightly to 129.20, while the Moroccan dirham was almost unchanged at 9.18. And that's our Money Moves markets today. Back to you, Melissa.
Thank you very much, Grace, for those market updates. That's it for today's edition of the show. From all of us here at the FMDQ studios, we say thank you very much for watching, and bye for now.